All right, welcome back everyone to another edition of Weekly Stock Market Mutterings, where I'm going to take a grope in the murkiness. I'm going to go down there and I'm going to try to find you the best setups to trade this week, and I'm going to try to help you make some sense of this market. Man, we went, if you remember, like it was just like a week and a half ago. I was in there, the actual market muttering was, this damn thing never goes down no matter what they throw it. It's like the Teflon market. They cannot make this thing go down. And here you are a week and a half later. I mean, you knew that the correction was coming, but no, we'd all be billionaires if we knew exactly what time that was going to happen. It certainly went on a lot longer than I thought, but we were in official correction territory, past 10% as I'm doing this video. And it just like they always say, stocks take the staircase up, elevator down. I mean, it was just a few days, bam, 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 started last Friday and just shook people all out. And you saw a pretty wild market. So we kind of went here in just a 2-week span of time, from the most peaceful and docile market in the history of the world for over a year and a half to just a schizo market. I mean, just a market that's got absurd amounts of volatility. We're going to go over it, and you're going to see it in these charts. I'm sure you guys already know. You're looking at these charts. These maddening, just enormous psycho ranges that these stocks are dishing out here. So we're going to try to go into that and talk to it a little bit about it. Before I start, don't forget, you guys need some help. Visit thelincolnlist.com. Do our best to kind of walk you through this type of market. So the story last week, before I get into the SPY, the story has to be SVXY. Now, I'm not a volatility trader, but this has just been something that's going around the bend for the longest time. That short volatility traders, it was like easy money. It was just like an ATM machine for the longest time. And this thing just literally gets blasted. And the sad thing was, when you see something like this with this enormous sell-off, it's hard to believe that the SEC doesn't halt trading when this thing gets out of control, because it had already been out of control when it passed 60 bucks. This thing dumps from 125 down to 60, down to 40. And of course, you got dip buyers coming in there trying to pick this thing up. I didn't know enough about this thing at all. But here you are nestling down here at about $10, 11, let's say 11 bucks here. Unbelievable move. And I've been through market corrections before, went through the .com. I know firsthand what it feels like to be long something that looks like this. And then, of course, I went through the credit crisis as well and a couple other smaller instances in the market. And, you know, it doesn't matter. It doesn't matter about I told you so and all that. It still hurts to see that, because you know there's a lot of blood, there's a lot of pain, there's a lot of hurt, probably broken up marriages, just some nasty, nasty crap that gets happened. I know that's a little off topic what we're talking about here, but man, if the government's out to protect you and to help you, they should have done something to slow this bad boy down. But that's another topic. So let's move on. Let's talk about the market. We'll just take an overview here of the SPY. As we said, it started back last Friday with a really big break. And what we saw that time was a lot of volume coming in with that selling. Now, one of the things that was not there was the standard V-shaped rally that we've all come to know. You know, we had crashes before where we've had the flash crash. I think it was in 2010 or 2011. You had that, if you want to call it a crash, a nice big sell-off during Brexit. And then, of course, the election. So there have been events before, but they've always followed up with that V-shaped rally, and the thing ends up making highs. Well, Mondays just starts out with a massive flush here. And it does not get picked up. It blows right through the 50 moving average. So all of us as traders are looking for the quick bounce. You get that out of a big trade that we had, if you watched the week video, right out of the open with NVIDIA. Thank goodness it was sold at that point, you know, because it just reversed itself, and everything did too. And I was thinking, like with a lot of other technical traders, well, we might see some support down here at the 50 moving average. For you guys that are watching the video, that's the red line right there on the daily chart. And man, it just blew through it like it was like a wet paper towel trying to stop a bowling ball, and boom. I mean, this thing just gets nuts to the downside and just finishes down there. Just really just the acceleration. It's like mass panic, algos, everybody's just selling off. Next day, you get that attempt at trying to make the comeback. And I think a lot of people at this point thought, well, maybe we reclaim this 50 moving average on the daily chart and we start to work our way back up to all-time highs. No, this thing does get there on Wednesday. It does just crest that. You can see it right here. It just hits that 50 moving average. And then down she goes again, and with a vengeance, it retests it. Now, the thing that you were looking at here for the technical traders was that 259.60 area, somewhere in that double bottom, that once you got down there around Thursday, that you might see a stoppage of that. No, just like this previous break of support, it blew right through that one, closed down on lows, and then it makes this futile attempt at bouncing on Friday. Now, one of the things that I made that video, without taking up too much time here, is what we got to do as traders is not predict bottoms, but look for levels. That's what that video was a couple of days ago. If I can remember, I'll post a link up here for those that want to watch it. How important these levels are. Because the key here to this is this little breakout that was trying to happen early on Friday. We didn't think it was ready, and because this market had been selling off and stuffing every move, I felt that the real move, that real power move where it had to shake everyone out and where you would get the big turnaround in the market was on the 200-day moving average, as this blue line right down here, which is roughly 253.81. If you follow my Twitter feed, I had said that. It was on Stock Twits. I mean, every place I said, we've got to get down there. And that's where I would feel comfortable stepping in. And, you know, just it traded a little bit below it, but then you got this mass movement. So not only that, just wicked range. I mean, the spot, what was it going up? 30 cents to a dollar maybe a day. You got moves where it tanks, you know, $6, then bounces $6. So the question you're going to ask yourself without taking up a bunch of your time here is, what are we going to do, man? What are we going to do next week? Are we going up? Are we going down? Are we going sideways? Well, look, the first thing you got to understand is this market went up religiously for years. I mean, we didn't have a 5% correction for over 400 and some trading days. It's almost a year and a half. So it's going to take a little while for this thing to settle down. It's just not, this is not going to be a V-shaped rally. And if it would, I'd be very, very surprised. I don't think you're going to see that just yet, because you can see the wide ranges. If you're trading, if you're an investor, if you're going to ask the question, if you're an investor, yeah, we'll come through this. This is probably going to end up being a great time to buy stocks. But for you guys that are day trading, short-term trading, you got to be cautious here. You've got to look for certain levels. I would say that we got to look right here in this spot, up here on the top chart, roughly in this area right here, this 258 to 256. I think you got to be holding that up. That's got to be tested early on. And if that can hold, then maybe we can start working our way back up to Thursday's high of 268.23, and then maybe eventually by the week or throughout the week back to 271, which is the 50 moving average on the daily chart. I would use those ranges. Again, that's wide range. By all means, this thing needs to hold up that lower 253.25. If it loses that, you got a long way to go. It's hard to tell. It'll take days for that to shake out and rebuild some levels, but you're going well under 250 if that happens. Now, let's say the gap up is the first move that you see on Monday. Be cautious about buying into that gap up. Wait for your levels. If anything gaps up, then the immediate level becomes Friday's close area, which is about 262.50 to 262.75. That's what we're going to look for in the market. Now, for individual stocks, NVIDIA has been a really good trader for us, and I was ready to make this trade and get long this thing on Friday, but the market just went wacky. And it killed the range. I mean, this thing bounces after its earnings from 220 to 245, then ends up back, giving the whole thing back by midday before the market bounced. So I like this thing long going over 234, but when I say long, it's not something that you want to mess around with. You've got to pick your levels in this market. And, you know, if the market is strong and it settles down a little bit and some of the volatility gets, I like this to 240s, 245s, and maybe work its way back up into, you know, well over these highs again. Same thing as the market. If you start taking anything that you're looking at, if it starts taking out the lows from Friday, you got to be concerned, because the market has been given an area. It showed that the 200-day moving day average. It showed it bounced there. It closed strong. And bulls felt like they were back with a vengeance. You got to build on that. If you can't build on that, then nothing's going to be any good there. Now, on the other hand, we got this overstock might be worth an interest for everyone. Bitcoins, altcoins, they've been getting hammered for a while now. And I guess they're due for a bounce. You start looking through some of those charts, they look pretty good. In turn, The blockchain stocks that benefited so much from them have been hammered as well. Now, if that tightens up over there, you start to see a little bit of altcoin bounce or some coin bounces. Take a look at this overstock right here at 61. You got a nice little flag setting up here on the daily. Maybe they get a good boost. Could be a nice long going over that 61 if it sets up nicely. Careful though, you got earnings coming in there on the 15th. That could be somewhat of a problem. Definitely don't want to trade through those. But keep your eye on that. Nice looking chart here. If it can actually break out, you see some momentum in coins. Maybe the market turns around for a couple of days. I'd target that moving average up there of $64. On the short side, I like light. I like to light some light, and I wanted to do this one on. Friday if it broke out and got vertical above into the 58s, but it didn't make it, and it just kind of sold off with everything else. It's held up well through all of this, but for me, I want to be up towards this 60 bucks. I mean, you could buy it. I'm not looking at that right now. I'm not saying that's a bad strategy. If it goes up through 58 in a tightening pattern, you certainly have 60 in it. But if it gets vertical, moves into 60, I'm looking a little bit more short because it's going to be running from 45 to 60 nonstop every day, being green since earnings. So I'd be looking in that area to initiate a day trading short position. So, man, that's it, guys. I mean, really, a lot of this stuff depends on what happens here with this market. It's been a wild ride, and I know for a lot of you, this is the first time you've ever seen anything like this. And it's been a while. It's been a long time since I've seen it. And one thing that I do know that's been common with all market corrections, it's healthy long-term for the market, you know. But what really this signifies is a chance for you to, number one, learn. If you got burnt during this, just learn. Watch this if you've never been through this. This will give you a lot of education for the future on how to trade. But if you look back, you know, recessions and market corrections, yeah, sometimes they last 3 months, sometimes they last a year. But the volatility should tighten up a little bit. Just make sure that you pick your spots and use your stops. And you should be able to work your way through it. And it will take a little bit of time for this to come down. Remember, it's been a long time. This market's been bullish. So this is much needed in long term. This is probably a good thing. But for the short term, you just got to work your way through it. Anyway, if you need some help with your trading, you know where I'm at. I hope you enjoyed this. If you've got any suggestions, you got any questions, you got anything you want to say, support at thelincolnlist.com. Take care. Until next week, good trading.